Okay, so AMD went from like $1 to like 50. And this is probably one of the crazier stocks in this portfolio. I gotta be honest, this has been a freaking roller coaster. But it's cool because like once you understand technical analysis, like you can kind of understand what's happening with the stock. And what's interesting is like as soon as you have this foundation, it becomes a lot easier to predict some of these movements. And that's why we're starting out here with a chart that has a lot of lines. And I understand that like there are a lot of lines on this chart. And basically all I want you to think of these lines are horizontal support and resistance levels. These are psychological price levels. And the way we establish them is really, really basic. You have a peak right here, you have a peak right here, you have a bottom right here, you have a peak right here, you have a bottom right here. And you just kind of good at these over time. There's a bottom right here, a bottom right here, and then kind of some peaks right here. And that's how you get sort of these first couple of lines. You're just putting lines where there are peaks and troughs and peaks and troughs and troughs and peaks and troughs and peaks and consolidation. And here you can see a bunch of peaks and a bunch of consolidation. And over and over and over, what you're doing here is you're just drawing lines where you sort of see a bunch of peaks and a bunch of consolidation. And those are going to be really important. Like right here we have 1, 2, 3, 4 points, 4 peaks. This one's kind of a consolidation point. But 3 really solid peaks. And that makes a very strong line. Similarly right here, you've got 1, 2, 2 peaks and then like 2 points of consolidation. Right here you've got a really important peak that is like all on its own and then important consolidation. And then right here you got a peak, and right here you got a peak. When you have a peak that's like super high all by itself, especially in some kind of financial bubble like the dot-com bubble or like the recession, those are going to be really important psychological price levels. When you look at the actual current price of the stock, you're going to see consolidation around these price levels. You're going to see peaks around these price levels. And you're going to see consolidation, peaks, and then sometimes it'll break through those consolidation phases and explode, which is like, crazy. So we got in this position right here before this giant red dip. And I'll go over to the computer just so that it makes it's a little bit easier for you to see. Let me make sure I write the ticker first. It was actually 13 flat, which lucky number, right? You guys, this is probably one of my crazy, like, oh my god, this is such a good stock. Yeah, it's pretty. The ex-dividend date is in 1995 because these guys have not paid a dividend, nor will they pay a dividend. At least not from my knowledge. But actually, real quick, before we get into the stock, I want to explain to you one really important key concept about the computer market. And some of you guys might know this, some of you guys might not know this. Basically, there are like two big players in like the GPU, graphics card / CPU market. And these are just like the really important core parts of a computer. This is the thing that makes it turn on and like do things. And this is the thing that makes your graphics really good if you have one, and you might probably have one. Like if you know what these are, great. If you don't, not a big deal. Important thing is that they make computer chips. And basically they're the only two people on the planet that make these two kinds of computer chips. Nobody else really makes them. So you kind of have like these two players and that's it, okay? Basically what happened is you have, judging off of memory, it was about 85% of the market dominated by Intel in this industry. It might have even been 90%. I mean, it was really like a vast majority was by Intel. And then there was a little teeny sliver, and that little sliver was AMD. Now, this AMD sliver was like, I don't know, 10%. Okay? Now, it's important to understand that when you invest in companies, you've got the safe, solid, stable, conservative investment, and then you've got AMD. Okay? So before we get into this, I just want to show you what Intel looks like, just so you can take this as a point of comparison as a more well-established long-term company. These lines are all from AMD, just ignore these lines. But basically you can see the same spike in 2000, but not as much of a spike in 2008 or 2006, not as much speculation in it, and a lot more stable growth. Like it's not just straight up, straight down, straight up, straight down. Like you have a pretty like conservative, solid growth curve here. And honestly, this is a pretty nice interior Bollinger Band W setup. There's your Bollinger Band. But I'm not going to focus too much on Intel right now. We're going to go back to AMD, okay? Alright, cool. So, just so you understand sort of the game we're in, we've got AMD, which is like the crazy kid at night, and then Intel is like the laid-back older brother who kind of stays home every night on Friday night and just like does computer homework or something like that, which is totally cool, okay? Just so you understand, we have two different games we're playing here, and Intel owns 90% of the market for those games. I'm going to dye this red because AMD, they're the red cup. Now, Intel and AMD had a little bit of a switch in dynamics after this time period. We'll call this like 2016 to like 17, it was a while ago, for sure, okay? A little bit of a switch happened in 2000, I think it was 2017, yeah, 2017. Little bit of a switch, okay? And what happened is pretty basic. Basically, AMD came out with this entire new line of like CPU chips, and they also planned an entire new line of graphics cards. And within the span of about 4 months, 5, maybe 6 months, basically to completely oversimplify what happened because it doesn't matter that much, Intel went to about a 50% market share, and AMD went to about a 50% market share. Now, to give you guys some perspective on Intel AMD market share charts, I'm going to just off the top of my head sketch the market share comparison chart from the year 2000 to today, okay? Now, I want to point out 2006 on this chart because remember when we saw the Intel chart, there wasn't a really big spike in 2006, there wasn't a really big trough, it was basically flat. And that's because Intel is a well-established company. That's because they're pretty freaking solid. And a little bit of a spike in news or a difference in volatility in some industry isn't going to affect a well-established company as much as it's going to establish AMD. AMD, if we look just solely at the fundamentals, if we look solely at financials, AMD's got a market cap of say 62 billion versus Intel's 275 billion. So basically, if we look at market share, right? This is like general consumer computer graphics market share. And remember, markets can grow, right? So market share isn't exactly like the best measurement ever because markets can get bigger, markets can get smaller, and usually the goal is to just make a bigger pie rather than try to have more of a smaller pie. But for general sake and for this, it really does help a lot to see this graph. Basically, you've got Intel right here, and here's AMD. They're basically 0% market share, and then all of a sudden they have this big spike. And everyone's like, oh my gosh, AMD is going to be the biggest ever. They're going to overtake Intel. They released this amazing new product. And their stock went from $5 to 40. Okay, that's very impressive. And then it crashed and went back down. And then they had no new products for like an entire decade. They did absolutely nothing for 10 years. And then they released this new line of products, and oh my gosh, now they're back up here, right? And so you see the exact same thing happening over and over again, where AMD releases new products and they take some market share really, really quickly, and they quintuple their market share, and because they quintuple their market share, their stock goes up by a factor of 10. That's sort of the basis of this investment, and that was the basis of me investing in it, is I kind of knew that, well, at the time, like I'd been following the numbers, I've been following the new products, and AMD released all these new products, and they took up like half the market really, really, really quickly, but their stock didn't really reflect it, right? So here's what was happening with their stock. It was actually, you guys have had this pounded into your head over and over and over, but basically it was in a downward wedge, okay? And so our support line is at about $10, which we can see here is a pretty solid historical support line, historical resistance line. You got a peak right there, and then minimums over there, you got bottoms right over there. And then this downward line right here is sort of your resistance. This is your downward wedge. Now at the time, I didn't really know, it was like one of my first investments, right? So I didn't really know about downward wedges yet. So I basically just bought this off of pure fundamentals, based purely off of going to Google and typing in Intel AMD market share chart, and just going like the first thing I found and finding that chart and realizing, holy crap, these guys are doing exactly what they did in 2006. And in 2006 when this happened, their stock exploded. I didn't really know how to set up pattern, and because of that, I just got in off fundamentals, and I was like, look, they're making a bunch of new products, they're gonna crush it, and they have half the freaking market share, which is crazy. There was a bunch of news about AMD going from 10% to 50%. Now, let me ask you a question, okay? If a company owns 10% of a market, and then they turn that 10% into 50%, and the market is a couple $100 billion, do you think that stock will go up? It's a very basic question. So I buy this stock and I'm like, all right, well, I guess I'll just sit here for like a couple of years, don't have to do anything, don't have to work, stock's gonna go up, we're gonna make a bunch of money, it's gonna be amazing, financial markets are the greatest. Does that sound about right? Well, to me the time did, and it did, and it did, and it did, and it did until it didn't. And there was this one day that was devastating. The stock was at 1380. And I had bought kind of like back here, I think it was at like 13 bucks or something. I bought like right here, like as it was going up, and I was expecting it to keep on going up just based off of fundamentals, which usually you need to have fundamentals plus technicals, which I didn't really know at the time. But now you know that, which is cool. So I have been holding and holding and holding and holding, and the stock had gone down to 10 bucks and up to 14 and down and up and down. And I remember this one day, the market opened and the stock went down, it went down 33% in one day. And in that one day, it was probably the worst day ever for my portfolio. I think my portfolio went down maybe 4.5% that day. I remember it, and I was like, holy crap, this was a really bad day. Wow, oh my gosh, ouch. That's what most people make in like 6 months, and it just got devastated in a day. And I remember that happened, and I was like, okay, well, what you need to do here is pretty simple. I need to figure out, should I stick with this investment? Should I quit? Should I stick with this investment? Should I quit? Now, what's interesting is, if you quit, you lose everything. If you stick with the investment, you have the growth potential. And what's interesting is usually about an investment based off of technicals or based off of fundamentals, that decision is usually right. But very, very oftentimes, and what I found through experience and what I've seen with students, is that the timing is a little bit off sometimes. The timing is like, I don't know, plus or minus a little bit. And obviously it depends on your time frame, but timing and execution is kind of the toughest part. Like you could short AMD when they're at 30 bucks, and you could literally lose your entire position if you cover it in like a month or two. But if you hold it for a year, then you double or triple or quadruple your money. And so timing is kind of like the tough part with these kinds of investments, where you have really big potential for movement, is like you know where it's gonna go, but it's tough to predict like the exact top or the exact bottom. It's just a difficult thing to predict. And so because of that, you get in and then you just kind of have to wait. And it's fine if you're doing this with stocks, because either you own the stock or you short the stock. And you know, short the stock, AMD doesn't pay dividends, so you can short the stock, and all you have to do is pay like margin fees, very, very minimal, whatever it is to short it with your broker. But if you're trading this with options, you're trying to leverage this with options, this is where you can get into some trouble, because this position took, I would say, a good 1 year to actually do anything for me, besides break even. And because it took so long to actually do anything, like my portfolio didn't move for a long time, at least this portion of it. And so because of that, if you had like a 1 year option in this, it would expire worthless if it was at like $15 strike. It would be totally worthless after a year because the stock didn't go up quick. So it's important when you're trading and you're leveraging with options, which is, you know, a little more advanced, but it's important. Like even if you know that the stock's gonna go to 50 bucks and you can like literally, a $15 contract might be like 2 bucks, and that would be worth, you know, if it goes to 50 bucks, like I would say probably $40. So that's like a 20x return if my math is right. But like that's not gonna happen in a night, right? And so like you gotta give it time. And that's exactly what happens. If the stock goes down 30% one day and I'm like, gosh, this is bad. What I need to do is I need to stop looking at this stock because I know that it's gonna freaking crush it, just based off of the fundamentals. I have a stop loss, you know, if it goes to like 7 bucks, like sure, you know what, it's not gonna happen if it goes to 7 bucks. Besides that, like I'm not gonna touch it, right? And that's really the tough discipline that you have to have, is you will not mess with that investment. And then, so what happened is it went down and 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 went down. And then one day it went down to like $9 and it broke the $10 mark. And everyone was freaking out because $10 was a really big psychological price point. And if it like went below 10 bucks and it closed below $10, like I was freaking out. I was like, oh my gosh, this is terrible. Do I have to get out of this position or what? And I remember my dad, he kind of copies my investments because my investments outperform like anything that he could ever, like at least anything that he's ever invested in. He just never had as great returns as most of the investments I make. And so he just kind of copies my investments. And so at the time he was like, well, this is obviously not one of your winning investment ideas. I'm gonna sell this stock for a tax loss. It was a little bit before, like this is a weekly chart, but it was like the last day of December. It was like, I think it was like December 20th or something. And he sold his entire position for like a 40, or he bought at 13 with me. So I think he sold it for like a 25 to 30% loss so that he could roll it over onto his taxes. And this is literally the worst thing you can ever do. You do not want to make a decision for the sake of taxes. This is ridiculous. Crazy thing to do. Warren Buffett very recently paid 1.5% of all U.S. corporate taxes. He paid like $3.5 billion in taxes. Like, you want to have bigger problems, and paying taxes is a good problem to have. You shouldn't make investment decisions based on avoiding taxes. That's a crazy, crazy thing to do. You want to pay more in taxes, because the more you pay in taxes, the more money your portfolio is making, right? And so that was a really kind of silly thing my dad did, was he sold for a loss so that he could take that tax loss. And I was like, dude, are you serious? It's AMD, dude. 50% market share, man. They're gonna crush it. And at the time, I had eventually learned about downward wedges. And then I showed him the chart, and I was like, look, it's a downward wedge. I mean, you can't really see it as much, I guess, on here. You kind of got like your downward wedge, but you can see it a lot better on here, right? You got your downward wedge. And I'm like, dude, this is a downward wedge. It's gonna freaking explode. It's gonna be awesome. And he's like, nah, not gonna happen. Don't sweat it. It's okay. I'll take the tax loss. And that was a big, I mean, you see the price. It's a $50 stock. That was a big mistake. And so it's important that you understand that A, you're not gonna get timing right. Like nobody gets timing right 100% of the time. And you take whatever time you put in, and you're okay with that. You want to be good with not getting timing right. You want to understand that that's gonna happen. You want to accept it. You want to embrace it, and you want to move on and say, look, I am willing to have patience. I am willing to wait, because I know that if I can do this, AMD, I can make what? I can make this money, right? And so that's the big mentality behind it. So I held through this really big pullback, and it kind of did this like W setup, which was kind of cool. And basically it broke out, and here's the cool thing. Like, for me, I waited like 2 years, about a year and a half, 2 years in this trade before I actually made any money in it. What's cool is if you actually know how to do technical analysis, you can just wait for the wedge to break out. And as soon as the stock breaks out of the downward wedge, you just buy it when it breaks out of the downward wedge, buy it then, instead of waiting forever and ever. So instead of like waiting all this time, you can just buy it when it breaks out at like 1440 and pay like maybe 5 or 10% more, and then be in the trade for like a tenth of the amount of time, because the moment it breaks out of the wedge, the stock went to freaking 35 bucks, 30 bucks. And so what I did here is I looked at my long-term support, my long-term resistance levels. Wow, that's a lot of money. Where should I sell, right? And so you see over here, you can kind of see the stock went up really quick, and then it went down really quick. So the question is, how do you figure out where to sell? So for me, I sold half. I was out half at 32.75. And for me, like, the question is, okay, well, how do you get to that number? And it's really easy. You take this line and you sell it when it hits this line. For me, I picked this line instead of these two lines for two reasons. The first reason was, if you zoom in and you look at this on a little bit more of a granular level, it didn't have continued momentum. And so because it didn't have continued momentum, I didn't really think it was going to be able to like reach all the way up here. And also because like these price levels that are very extreme, they came in 2001, they came in 2007. But at the time it was like, I think it was 2019 when that happened, 2008, it was 2018. It was the first day all year that like cross country was over, and it was like the beginning of December, and the season was over, and it was the first day like all year I didn't have any practice after school. And I was like, oh, this is so great. I love running, but like I would love a day off too, right? Anyway, so I remember it was the first day without practice like all year. And I come and I sit down on this bench, like outside of school. And I'm sitting down on this bench, and I'm just looking at my Yahoo Finance, and I'm just looking at AMD stock, and I see this thing absolutely exploding, and I'm like thinking and thinking and thinking, like, is this going to hit, 40, 50 bucks, what those previous highs were? And for me, as I kept thinking and thinking and thinking about this, what I realized is, like, we're not, at least at the time, like, we weren't at the peak of a financial bubble. We weren't at the peak before a recession. And, based off of stuff we've been covering in this masterclass, stuff like, unemployment levels, inverted yield curves, those hadn't happened yet. I didn't actually know about either of those at the time, but I did kind of just know, feeling the market, trading the market consistently, that, it was not really like the peak of the bubble just yet. And so because of that, like, I inherently kind of understood that they weren't going to have the momentum to just keep on going. And I could have been right, I could have been wrong. In this case, I was right. And I sold very, 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 very close to the top in that short time period. Got out half at 32.5, almost tripled the investment, which is pretty dope, to be honest. And I left the other half because I wanted to see what would happen. In the short term, that was a stupid decision because the stock went down, 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 down. But when I was sitting in that bench, and I was sitting at school after school that one day, like, I was laying down, I was like literally so tired. I remember I laid down, and at the time it was junior year, right? So I don't know if you guys have been through high school and stuff, but where I went, junior year was the hardest year by far. And like, my high school was like some college prep school, and it was literally like 3 times more work than I have in college. Probably, like, honestly, I think it was upwards of 8 times more work. Like, I worked way more in high school than I did in college. Anyway, like, I don't know if I'm even learning anything important anymore, so whatever. That's beside the point. The big thing is, like, I was super tired because I was getting like 4 hours of sleep every night, which is insane, and it will totally mess up your trading. And it's one of the big reasons I wasn't able to day trade. Besides the fact that I was physically in school, is you just can't really day trade on 4 hours. You can't trade 9 to noon on 4 hours of sleep. It just doesn't work. And so I remember I had gotten no sleep the night before, and I'm lying on this bench with my eyes shut, like, thinking about AMD stock, and it starts to drift away and like fall asleep. It's the first time ever in like 5 or 6 months I had a day off after school where I didn't have practice. So we had practice over the summer too, which was super cool. It's just, it was a lot, especially when it was like raining all the time. We would literally have these races where we would, well, not races, but there were practices. And at practice, everyone would warm up, and while we were warming up, it would start to just pour. Like, it was like a waterfall coming out of the sky. It was massive, it was huge. I could not believe how much rain there was. It was insane. And as this gigantic waterfall of rain starts to pour down on everybody, coach is like, keep on warming up, do that warm-up run, 1.5 miles. And then we would do like the warm-ups, like pouring in the rain. And after we finished the warm-ups, I remember what would happen is he'd say, okay guys, I know it's kind of wet, it's okay. And it would literally be like a swimming pool. Like, we would all be soaking wet, we would have no part of us dry. And we would go out, we would run for like 8 miles or something in the pouring rain. And it would rain all practice. And we would get back at the end of practice, and I swear it was like all of us jumped in the freaking lake. Because we would kind of run alongside a lake sometimes. And it was actually the lake I grew up on, Mount Island Lake. And we would like kind of run next to the lake, and there were a couple of places where you could go off the trail and kind of jump into the lake. No one ever really did it because it was like shallow, it was kind of dirty. But like, it basically looked like all of us had just jumped into the lake and then come back, and it was still raining, so we were all still wet. And I remember getting home that day, and everyone got home the exact same way. They were drenched. I remember like the car seats, everyone had like soaking car seats, and everyone was just like dripping wet the entire day. And I remember I got home and I like had my shoes, and my shoes were like water shoes. They were just slushy, slidey, gushy things all day. And I got home and I was like, dude, what am I supposed to do with these shoes? I feel like I'm walking on water, because I was like walking on water. And what I realized was something really, really, really interesting. See, most people, they quit when they get to hard times. They quit when they get to hardships. And when they experience like any kind of like a moderate difficulties, they stop. They go home for the day. They don't push through. And I think that coach so much. Because what I realized is that what he shared with me was an opportunity and a way to push through limits, to push through boundaries, and to push through what you think is possible and go into a realm of extreme stress, extreme tension, extreme pressure that allows you to do one very, very, very simple yet underappreciated thing. And it's finding new limits, finding your own limits, finding a new opportunity, finding a new potential for yourself. It allows you to expand yourself or grow to a new level. Like AMD, they did not start out as a big company. They were teeny tiny. The only reason they got to have a huge market share and literally quintuple their stock is because they pushed through the hell that it was to compete with Intel. Just like you need to push through, like Coach would make us push through every single situation. We would never ever have a practice canceled unless there was lightning within like 5 miles. We would always run in the rain. We would always get pushed through that. And because of that, I think every person on that team grew to a mental level of endurance that is just unbeknownst to a vast majority of people. Because most people, they take like the easy way out. They do things the simple way. They don't worry too much about the details. They couldn't care less about the time. They couldn't care less about making a decision. And instead, they just kind of go around. And because they don't put too much attention on their portfolios or their investments, what happens is they have very, very small returns, maybe sometimes fractions of returns. This is like a cent, right? But when you just push yourself to go a little bit more, to do a little bit better, and to go past your existing limits, and to go through those difficult situations where you have this massive, massive influx of competition and challenge around you, look at the results you can create in the marketplace. It's exponential, it's staggering. And it's one thing I really cannot express enough. It's so thankful for the ability to push that hard. Because when you push yourself physically, it will fundamentally change your mental state, your mental capacity to invest better. To invest a level that most people would consider absolutely insane. Because you've been through situations that most people would consider to be absolutely insane. You've gone through that run that most people would literally like explode their head out and be like, holy crap, that's insane. This position sort of expanded to really, really high highs. Like I knew I had to take profit, but I also knew that there was more potential. There was more on the table here. And if I could just wither through sort of the difficult time of, seeing this investment go from $35 to $20 in the span of about a month or two, not even a month or two, it was literally like a week and a half. It took a week and a half for this stock to go from $15 to $30, and it took a week and a half for it to go from $30 to $15. What I should have done is probably sell all of it. I probably should have sold all of it. That would have been the easy thing to do. That position freaking exploded! Now, I'm not saying I made the best decision. Honestly, I probably could have sold everything up here and then just bought back lower. But like, if I'm gonna be real with you, I would probably not have the balls to buy this thing after this giant pump. It just would be a really tough position to make. Probably would. I didn't. I actually know what I would do because I was in the position. Like I didn't add this position when it went to 17 or 18 because I didn't know if it was going to keep on going up or not. Like I had a price target of about $30. Hit my price target and I sold. And I sold and got out of the position because I didn't really know if it was going to go any higher. Like I knew their market cap quintupled, or the market share quintupled. But when you have a stock that goes from $15 to $30 in the span of like a week, you don't try to get greedy with that. You just gotta take the money to a certain extent. And for me, that certain extent was a 50% sell, and then the other half of the position has gone up another 40, 50, 60, 70, 80% since then, which is pretty freaking dope. Recently, I'm pretty sure these guys have peaked just based off those long-term resistance lines. They have hit every single resistance line that exists, and they're now forming their own new resistance lines. And so I've sort of lately been buying puts. I bought some puts at 39 when they hit this first line right here. And then I bought some more at 45. They've been doing really, really bad so far, so I closed out some of the positions on a stop loss, down about 50% on those, which is pretty bad. But they weren't as big as actual stock positions because they're options trades. And so I've kind of been waiting for those to play out, and I'll probably add to it. What I'm really looking for right now is very basic. I just want to see the MACD crossover on the weekly chart. The moment that the MACD crosses over, I'm gonna buy a boatload of puts and hopefully like have about a 5x return, 10x return. I think this is a more heavily traded stock. So when you have a more heavily traded stock, you have kind of lower overall returns. We'll kind of see how those work out. But again, it shows you can make money as the stock goes up, and you can make money as the stock goes down, which is pretty sweet because you can kind of like double tap the stock. And then when you do a double tap, like you make usually 10 times more money because the second tap is usually options. Because you make your first investment, and then you get really good investing over the couple of months or years, or however long it takes you, and then you can do options, and then you can leverage and scale, and have a lot more upside with it, which is cool. But you've got to go through the process first. Like for me, like I could not do like 20 hill repeats or 20. I remember we had this one hill that we would always do hill repeats on. I think it was like 800 meters. And it was just like a 45-degree incline. It was like crazy, straight up. And we would do like a mile in repeats on this like straight incline. And like there's no freaking way I could have done that ever with a reasonable time, or without passing out. There were a couple of guys that passed out, they couldn't do it. Like there's no way you could do that. You know, like think about it like a bench press, right? Like you have to like bench press 125 before you can bench press 150. You have to bench press 150 before you can put like, you know, 3 plates on the bar, go for your 1 rep max. Like that's not gonna happen if you don't put in the effort the first time, right? And that I think was the big takeaway with AMD. This one has really been a horizon shifter and an expander for me because you learn that like you can literally quintuple your money in like 4 weeks if you know the right stocks to invest in. And if you trade it with options, like this is a 10,000% gain. And that's exactly what happened here with AMD. It was a very fast wedge breakout. The moment that it got out of the wedge, and really to get a bulk of the profits on this trade, all you have to do is wait for the breakout. You don't have to hold it for 1.5 years like I did. And then as soon as it breaks out, just buy like calls at like 20 for like $1, and you know they go up by a factor of 10. At least I think they're $1. I don't know. What would that be? Those would be like $5 out of the money calls. And again, you know, you gotta be able to trade stocks. And again, these prices are probably not correct just because it was less volatile back then. I could have made the exact same amount of money, if not maybe like 10 or 20% less, if I just bought when it broke out instead of having like bag hold it when it went down 30%. And that would have eradicated a lot of my volatility and a lot of the portfolio risk that I have. And that's kind of what I would recommend you do. Instead of doing it the hard way, you just follow the technical setups, which you have in 9 to noon, and then you know you just get in when it's about to break out, and then you take a bulk of the like I would rather have 80% of the profits if I can be in the trade for 20% of the time that I would otherwise have been in the trade, because your capital can be better used in other places. So anyway, phenomenal position. It worked out really well. It has been absolutely amazing, and hopefully it will continue to be amazing. Last Friday, or I guess this Friday, it made a lot of money for me on the puts. So I'm excited about it. I'm happy about it, and just really great stock. So and it's just so great to trade too. Like look at this volatility. Like this was in the stock market secrets masterclass. So you guys probably have saw it. You saw it before, but I know you definitely did not see it when it was at $50. And it just kind of shows you the power of volatility and the power of speculation. And I guess sort of now that we're at the peak of some sort of, you know, whatever this financial bubble is going to be called in the next year or next 2 years or whatever they're going to call it, you know, we're kind of at the peak of that right now, and I think it kind of shows with these stocks and with Tesla too. I mean, oh my gosh, like I could go all day. I mean, I could go all day with Tesla, but you know, we'll see how it works out. It's some crazy cool stuff, guys. So with that said, thank you so much. Hope you get a ton of value out of this training. Go out there, apply it, absolutely crush it, and I will see you in the next podcast.